Hello and welcome to the Stansberry Investor Hour. I'm Dan Ferris. I'm the editor of Extreme Value and the Ferris Report, both published by Stansberry Research.
And I'm Corey McLaughlin, editor of the Stansberry Daily Digest. Today we talk with Luke Lango, the lead technology and cryptocurrency analyst at our corporate affiliate InvestorPlace.
I can't wait to talk to Luke because he knows a whole bunch of stuff that I know nothing about. And so get out your pens and pencils. And I think he's going to have a lot of ticker symbols and good information for us. So let's do it. Let's talk with Luke Lango. Let's do it right now. Luke, welcome to the show. Good to see you.
It's great to be here. Thanks for having me.
Yeah, you bet. I like talking to people like you because you know a whole lot of stuff that I have no idea. I mean, no idea. When people say, yeah, I'm a technology guy and I'm into cryptocurrencies, I'm like, well, I've heard of Bitcoin and Ethereum, but that's pretty much it. The rest of my knowledge is about things like Dogecoin and other bad jokes on the world. So let's talk, since you're a new guest, our listeners don't know you. Maybe we'll talk about, how you got here, where you started and how you got here. Because I was reading a few very interesting things in your past, so I'd like to hear about some of these.
Yeah, sure thing. Just the long story short is I went to school thinking I was going to be an engineer. I went to a tech school in Pasadena, California called Caltech, and quickly learned that I was not smart enough to become one of the best engineers in the world. I was surrounded by people that were truly brilliant and in fact have gone on to develop AI models at places like Meta, Alphabet, Palantir, et cetera, et cetera. So I developed just a really good network of people in college that have gone on to become really, not the execs, not the C-suite people at these companies, but the actual legwork at these companies, the people that are actually making the models. Elon Musk doesn't actually make the model. Mark Zuckerberg doesn't actually make the model, but my friends actually do. So I developed a really robust network of connections through my time at Caltech, and also through that time developed some connections in the venture capital world. And that's where I kind of jumped into while in school, and immediately after school was getting into VC investing, both on the startup side and on the investment side. Experimented around with a few startups in there. Sports analytics was always a passion of mine. Eventually got into the finance side of things. And then while doing all this, started writing about some of the investments that I was seeing in the VC space, things that were exciting, how that translated to public markets. And one thing led to the next, and all of a sudden I became a stock picker. And then 10 years later, here we are, focusing on tech stocks, cryptocurrencies, up and coming stuff, kind of big idea tech growth trends, because that's sort of where my experience and expertise allows me to have a bit of an edge on the rest of the market, if you will.
Good. Sounds great. So just for our listeners' benefit, because I know we're pretty good at knowing, what's on everybody's mind and what they're kind of obsessed with at any given moment. And there's been there's a lot of talk about whether AI is a bubble or where it is in the bubble, et cetera, et cetera. And I'm just curious about your take on that. Don't worry, we'll get to some meatier stuff, but we got to do this first.
Yeah. Is AI a bubble? I mean, I think a bubble is being formed in the stock market. I think that, as all manias develop, there's the boom phase and then the bust phase and then the durable growth phase. So I think we're obviously in the boom phase right now. I think obviously what comes after that is some sort of bust phase. So I do think that there is an AI stock bubble that is forming, but I think any bubble that does pop, it'll pop and it'll create pain in the market for a year or two, and then it'll recover, and then we'll enter the durable growth phase for artificial intelligence and maybe 2027, 2028 and beyond. And so I think if you're really looking at markets, everyone's worried about the AI stock bubble risk. I think that's a really small risk to be worried about. The risk that I would be worried about is the existential threat that AI poses to the labor market. That when I look at, what AI apps can do today, and they're in their infancy. When you really think about it, AI is 3 years old. Like public AI is 3 years old. ChatGPT launched 3 years ago, almost 3 years ago to this day.
Mhm.
Um, so public AI is really 3 years old. It's still in its infancy. And the things that it can do right now, I just downloaded this new app on my phone called Suno, which is an AI music making app. It's essentially text prompt to music song. So you type in, make me a song, a country folk song about being thankful for my kids and how being a dad is the best job ever for Thanksgiving. And then within seconds, it whips up a minute and a half, 2 minute song that's pretty good, actually really good in some instances if you know how to prompt engineer it. And you can do this for anything. So it's like, okay, well, what's the value of musicians in that world? And that's just a small vertical, a small facet of this whole revolution. I think that's happening everywhere. And I think if we're already at this point, while AI is still in its infancy, then where is AI is going to be in 5 to 10 years? MIT just came out with the study saying 12% of jobs can be done with AI. AI is only 3 years old. How many jobs will be done by AI within 5 years? So when I look at it from that perspective, I think AI bubble stock risks are very legitimate, very real. But actually, I mean, if we're talking about in terms of the Titanic, that's the tip of the iceberg. Underneath the water is a massive existential risk to labor that I think is going to create much bigger impacts on people's everyday lives over the next 10 years than
Right.
whether or not Nvidia stock goes up 10% or down 10%.
And smarter folks than probably all of us um, have said the same and expressed the same. What's his name? Gregory Hinton, I want to say, the
Right.
Godfather of AI, expressed almost the exact same thing, like an absolute existential crisis to labor. And several others, Amadei and even Zuck said, we're going to get rid of, Zuckerberg said, we're getting rid of the mid-level engineer. We're replacing mid-level engineers with AI. Could you imagine being one of those people? Oof, that's got to hurt. But overall, though, this this narrative has accompanied every transformative technology in history, right? And it even accompanied the internet to a degree. I remember people saying, it would put lots of people out of work, but of course, it really created vast new industries that just couldn't exist any other way. Um, so, what do you think about the prospects for just massive new undertake industries that we can't even fathom right now? Like they're building all this infrastructure, and we really, if we're being honest, I think, but I'm not you, I don't have the knowledge you have. I would guess like we don't even know what's going to be built on top of that, you know?
Yeah, I mean, entirely. But I think Corey brought up a good point. There's pain until you get there. That yes, I mean, I don't think the internet's all that comparable here. I think we're talking about things like the Industrial Revolution.
Mhm.
I mean, we got through that, but getting through it was really painful. There was a lot of unemployment in the transition period, and it was a long transition period. It was not easy. It was not easy on the labor class. It was very tough on the labor class for a very long time. And so I think I am hopeful that this time is not different, that there will be a utopia on the other side with more jobs, more industries that, to your point, we cannot even fathom right now. I'm
Mhm.
hopeful that we do get there, but I'm almost sure that in order to get there, we're going to have to go through a very painful, arguably the most painful technological transformation period in the history of, or at least in the modern history of humanity. And I think that does lead to, if you kind of take 4% unemployment where we are today, MIT's at 12% with AI. That's the 12% number goes up over time. The 4% number goes up when you get a downturn in the economy. So, I mean, you could be looking at like a 20% unemployment in this transition period.
By
And
by when? Amadei said like within a year to 5 years. It was
yeah,
three.
I would say that it's going to depend on the cycle. That I think that a lot, if push came to shove and companies were in a really tough position right now, I think they could fire that many people and still operate. It's not a matter of do they have the capabilities to replace labor? They do. It's a matter of do they have the want to replace labor? And right now there's not a strong want to replace labor because the revenues are growing. the economy, I mean, the economy is challenged, but GDP is positive, unemployment's still pretty low. That once that turns, I think once the cycle turns, once the macro cycle does turn, and I think it will within probably the next 1 to 2 years, then the capability becomes a want. And when that happens is when you're going to start to see mass layoffs to defend shareholder profits, because we have a shareholder capitalist society in America, and shareholders, once the revenue growth starts to dry up a little bit or slow down, they're going to demand cost cuts to keep those profit margins fat. And when that happens is when Meta comes through and does replace mid-level engineers across the board with AI. That is when Alphabet comes through and replaces coders with AI across the board. That is when Lululemon and Costco and Walmart, even the retailers, get in there. And you know how Zara, one of the big retail stores, they have this AI-powered checkout thing where you essentially just drop your clothes into a basket and it tallies up what you have, and then you just swipe and pay. There's like one person in an entire Zara store. Every other store will do that when push comes to shove, when the capabilities become want. So I think we're probably 1 to 2 years away from a pretty widespread mass unemployment scare. That would be my guess based on the macro cycle.
1 to 2 years is not a lot. And 12%, like that would be a disaster. That's like
Yeah.
we're deep in a recession. That's really bad.
Yeah, that's the very confusing thing about this paradigm, I think, is a lot of economic models out there suggest that this is going to sound maybe somewhat insensitive, but if you fire the right 20% and the other 80% make way more money because they're defending shareholder profits, then the economy still turns. And so what you get more so than an economic malaise is a societal rupturing. And so I think
Good.
that's really,
I'm so glad it's only that.
yeah, right. Well, that's why I think this time is a little bit characteristically different. Is we are, I mean, it's not going to look like '08 or the early 2000s. It's going to look different, and it's going to feel a lot worse for most people, I think. But I think the market can actually do kind of okay. I think the economic numbers outside of unemployment can be kind of okay, because I think it's just going to be this aggregation and concentration of wealth. We talk about the K-shaped economy everyone's talking about these days. I think, when this hit does happen, it's just going to accelerate that divide meaningfully, and is going to force some policy changes and some societal changes. I don't know what those look like. I'm not a politician. I'm not a social scientist, but I do think that it's going to force some pretty big changes over there. That'll go against this all-out blitz of capitalism that we've seen since, I guess, post World War II.
Yeah, I don't know. We could probably agree to disagree on some of this stuff, because I don't think the industrial revolution was terrible for the labor class, and I don't think that I would not call it an all-out blitz in capitalism since World War II. In fact, World War II launched the modern new era of massive big government, massive interference in economics, and it started in the 30s and the progressive era before that, and got worse. Like war always makes that stuff worse. But
Yeah.
overall, a market economy can take a hell of a beating in that way and still do what you're saying, which has happened since World War II, right? So it's, life has gotten better for most people, et cetera, and all over the world too. So, that's really what we're talking about, I think. Now, maybe it would be more fun to talk about some, technologies that excite you for other reasons rather than concern you because, it's the end of society and civilization as we know it. Maybe we should do
Yeah.
that. Just top of my head, just spitballing what we might like to do now,
Yeah, I don't mean to sound like a doom and gloom guy. I'm not at all. I'm actually, I remember I spoke at the Stansberry conference a couple months ago, and somebody came up to me afterwards and was like, "You know what, Luke? I never really trusted you all that much, even though you were right, because you were always optimistic. You were always, seeing the glass as half full and never seeing it as half empty." And that's naturally how I am. Like, I am a very, very optimistic and positive guy. I love to see the bright side of things. And so I do think, from that perspective, I do think there's a utopia on the other side of this rough transition period. But I think just the realist in me says that we are going to have a rough transition period. So while I do have this kind of you call it doom and gloom outlook for the next maybe 5 years, I think the next 1 to 2 years could be really really good in the stock market, followed by a really painful 3 to 5 year transition, and then some utopia after that, where we have an abundance of energy, an abundance of supplies, an abundance of goods and resources. And then we do create new labor classes, we do create new jobs, new industries, and everything works out. So I am optimistic about this stuff in the long term and in the short term. I just think in the medium term, we're due for a rough transition period.
Okay. Noted.
Yeah,
What
and
is
that
there?
makes a lot of sense. I mean, it's. I think we're already starting to see the. I mean, I don't want to belabor the point too much, but we're already seeing kind of the societal impacts. I feel like from just even the literally almost every person I meet now, if they find out what I do, the first thing is AI. Like, oh, AI is going to take this job. AI is going to take that job. I mean, it's really like in the last 6 months, it's really picked up a lot, just anecdotally, I think. But anyway, that's the pain to get there. I feel like is real. And it's probably already starting, but that said, the market can do what it does. The stock market can do what it does separately.
Yeah, I would agree that it's already starting. I mean, I just read a report this morning. This is weird to talk about the housing market as being a microcosm of this, but the housing market everywhere is frozen solid. Existing home sales are near record lows. I know here in Phoenix nothing's moving. My hometown of San Diego, nothing's moving. But I just read a report this morning that the Bay Area, San Francisco housing market's on fire, absolutely on fire. Like listing or home sales in the San Francisco area are up 40% year over year. Average time on market's only 17 days. Medium sales price 1.85 million, the highest since June of 2022. So it's like, everywhere else the housing market is frozen, but at the epicenter of AI, the housing market is absolutely on fire. That's a microcosm of the split that is already happening in society, driven by artificial intelligence. So yeah, to your point, Corey, I agree that it is already playing out in the real world.
Yeah.
Right. Now, if somebody told me that the housing market in the city where there's like more fecal matter on the street than anywhere else was going to be on fire, I wouldn't have believed them. But I live right up the street from there. I live in Southern Oregon, um, and we get a lot of transplants where in Southern Oregon, a lot of them. Well, matter of
Yeah,
fact,
it's where the money's at, and interestingly enough, it was the over $5 million listings that's where the market is the hottest, I guess. When you look at kind of the data,
sure.
it's homes that are over $5 million. So it's the C suites, it's the execs moving in there, making all this money off stock comp, the Nvidia people that are retiring early. That's what's going on right there right now.
Makes sense when you frame it that way. And I wonder, um, I always wonder when I hear something like that, especially in a coastal city, if foreign buyers are a factor. Do,
Yeah.
I mean, did the report you read say anything about
It,
that?
it, it did not get into from the country of origin of the buyers. It may have, but I didn't get to that part if it was in there. But I wouldn't be surprised if that is the case as well.
Right. But your guess is a good one, right? There's a huge AI boom going on, and they're buying houses while their shares are still high, so that makes sense. Uh, let's talk about. I mean, AI is such a broad topic, and I
Mhm.
feel like when I ask someone like you, like what technologies, excite you the most, like nobody can avoid it. Every now and then somebody like, well, there's this company like Whitney Tilson's talking about Joby Aviation. They
Mhm.
make basically flying cars is what they are, right? Which is pretty exciting. And I'm sure they use AI somehow, but it's
Yeah.
not like the first thing on the tip of your tongue when people start talking about AI. Like, is there something other than AI, or maybe we'll go the other way? Which do you want to do, other than AI, or a specific use case of AI that you're most excited about? That's what
Yeah.
I really want to know.
Yeah, I mean, I would say that everything relates back to AI in some way, shape, or form these days in terms of technological trends and breakthroughs. when you even talking about Joby, right? A big part of that story is their autonomy. A big part of that story is not, it's cool that you're putting these flying cars in the air,
Hmm.
but with pilots in them, it's not that cool. You make them autonomous, and all of a sudden, it's really cool, right? So that's, I mean, when you look at their conference calls, and you kind of dig through their transcripts. A lot of it now is dedicated towards FAA certification, obviously, and then
Hmm.
autonomy. Like the other half is autonomy. So everything in some way, shape, or form in the tech world relates back to AI. So I would say within the AI umbrella, I think the theme that's going to be one of the most defining themes of 2026 is going to be the shift to custom silicon. That I think Nvidia has been the poster boy of the AI boom for the past 3 years, ever since ChatGPT launched.
Yep.
Their GPUs have been the epicenter of all of the spending. That is starting to shift. We are starting to see a shift away from NVIDIA GPUs towards custom AI chips, towards custom silicon. Google's TPUs, tensor processing units, have really started to have a moment. First, it was their Gemini 3.0 breakthrough. The Gemini 3.0 model is fantastic. It's so good that the leader in AI, OpenAI, their CEO, Sam Altman, has issued a code red to their company saying, hey, you know what? Gemini 3 is so good. We need to go all hands on trying to make ChatGPT better. Gemini 3 is built on top of TPUs. So that is validation of the TPU over GPU argument. And then you have Meta ordering purportedly several billions of dollars worth of TPUs instead of NVIDIA GPUs starting in 2027 and tapping into Google Cloud's TPU services in 2026. Then Amazon just launched their Trainium 3, which is their own custom chip, their version of TPU. So you're seeing Meta has their own chips as well. Microsoft's working on their own chips as well. So big tech is they've been working on these custom silicon efforts for, I mean, 2 years now, I would say, in earnest 2 years. But they're accelerating them now that Google has kind of shown a proof point, validation of, hey, this is, if you really get the custom chip stuff down, this is what's possible. Meta sees that, Amazon sees that, and now I think they're going all in. I think 26 is going to be the year of custom silicon.
Who's building all this stuff?
Yeah, so that's the question. I think there are four companies to play this. Broadcom is number one, AVGO. They're
Mhm.
the ones developing Google's TPUs. So Google's and Meta as well. Google and Meta have their own chip efforts. Those are built with Broadcom. Amazon and Microsoft are building their own chips. Those are built with Marvel, MRVL, and ARM, ARM.
Mhm.
So I think Broadcom, Marvell, and ARM are the three kind of designer developer ways to go. And then all of them are still being fabricated with or by TSMC, TSM. So I think that's the four horse way to play the custom silicon effort is AVGO, MRVL, ARM, and TSM. Those are the four ways to play it, and it's away from the the NVIDIA complex, if you will. Now, an interesting sub narrative here is that NVIDIA, when you stand up a giant NVIDIA GPU data center with these GPU clusters,
Mhm.
NVIDIA has its own proprietary in house networking called InfiniBand. So,
Mhm.
networking is how you get these GPUs to talk to one another. Very important for operating a full scale data center. NVIDIA has their own in house architecture for that, InfiniBand. If
Mhm.
all of a sudden these GPU data centers turn into custom silicon data centers, TPUs or Trainiums or whatever it may be, or Inferentia, that's what Microsoft's working on, you don't use the in-house NVIDIA networking solution. Instead, you use a custom networking solution. And that's where a company like Lumentum, LITE, or Coherent, COHR, these are networking plays that will stand to benefit if indeed the market shifts away from NVIDIA GPU, shifts away from in-house InfiniBand networking towards more custom networking. So you kind of have your four big horses to play it, and there's definitely sub narratives in here to play this shift away from NVIDIA GPUs and towards custom silicon, which I think is just starting.
You mentioned, of course, Taiwan Semi,
Mm-hmm.
the fabricator. Um, do you think that, of course, the government owns 10% of Intel now? Does that mean anything
Right.
to you? Do you think putting money in, whether it comes from the government or anywhere else, that Intel has a prayer of becoming competitive again?
Uh, so I think another one of the defining themes of 2026 is going to be the White House putting money to work in the AI complex. Um, Intel is, I think, stands a chance to be a good player in this space, but as of the most recent news, they're still going to make their chips on TSM's technology. Like Intel is just going to be part of the design. They're not going to be the actual fabricator. The actual fabricator of Intel's chips is still going to be TSM with all the foundries they're building actually out here in Arizona. They're wild. They're literally the size of like not small towns, medium towns, even large towns. And they're building like 4 or 5 of them out here in the suburbs of Phoenix or the outskirts of Phoenix. So it's very interesting that even though the White House has taken the stake in Intel and wants to, make chips domestically, they're still using TSM to fabricate them. So I don't see TSM as being competitively challenged by the White House and Intel's partnership, or I think the White House gets involved with some other chip designers as well. I don't see TSM as being challenged by that. Their chokehold on this industry is too large. Their technology is too good. They're too far ahead. Maybe 10 years down the line, a competitor emerges, but not in the foreseeable future. Not in a way that would impact the stock.
I see. It's just I guess I have a bit of intel on the brain because I read there are books about it and stuff, and Andy Grove has a book, and you if you read that stuff years ago or whatever, you develop this sort of respect for what happened there, and at one time it was this great repository of engineering talent. It was like this amazing thing, and then now you're just just gone. That's just gone. And we could probably name other things, that other situations that are similar, but
Mm-hmm.
that's the one that just constantly. And I heard a pitch for Intel. I don't know, it was probably 3 or 4 years ago, and it just about made sense to me. And but since then it hasn't done it. It's just like it's done. Just forget about it.
Yeah, there's been a massive brain drain. I mean, I'm a big believer in talking about my backstory at the top of this podcast. Now, I believe in people. I believe in talent. I believe in investing in people, investing in talent. 'Cause I think great people build great products make great businesses, and great businesses make great stocks. So I think it starts with people.
Mhm,
Intel has had a massive brain drain.
mhm.
And the talent's going to Nvidia, the talent's going to AMD, the talent's going to startups, the talent's not sticking around in Intel. And so I think that is a fundamental challenge for them. Now, the White House could change that with their investment, and now maybe they're a bit sexier, so to speak. But I'm not seeing that really materialize or manifest yet. So until I see that, I don't want to say I'm anti-Intel, but I'm not all that excited about Intel because I just think the brain drain's a real big problem.
Yeah, I didn't want to, I don't want to spend too much time on Intel. It's just a personal thing more than anything else, because it's just, I actually had a good run with it 2 years ago. I recommended it, I think maybe in 2009 or sometime like that, when nobody wanted to buy anything, and it ran up pretty decently, and then that was it.
Yeah.
But anyway, getting past that, getting past that.
Yeah, I just wanted to
Um,
go back to the custom silicon uh,
Mm-hmm.
story for a second. Can we just explain to people like what that, you know, all this AI stuff is new for everybody. What that means
Sure.
specifically? Yeah.
Yeah. So I think the best way to think of it is in terms of an analogy to cars. So NVIDIA's GPUs are like Ferraris. They are these super high performance, very sexy chips that can do a lot. But you don't need to drive a Ferrari to the grocery store. You don't need to drive a Ferrari to pick up your kid from school unless you're trying to show off to your neighbors, right?
Yeah.
Yeah, the
Some people
Ferrari
do.
is it's a great car to have. It's a fancy car. It can do a lot, but it's not really what you need. You're overpaying. If that is your daily driver, you're overpaying for insurance, you're overpaying for the car, you're overpaying for everything. What big tech is doing is now shifting to Toyotas and Hondas and more affordable cars, their custom silicon efforts. So they're making chips that are custom to their applications to do something very specifically. For Google, it might be their TPUs are really good at advertising, at really good at AI advertising, AI targeting, things like that. So they're building custom chips that are specific to their use case applications. Head for head, these chips are not going to be able to compete with the Ferrari, to compete with Nvidia GPUs. The Nvidia GPU is going to be able to do way more. But these chips are going to be able to do X or Y or Z way better than NVIDIA's GPUs can do X or Y or Z, and do so at a fraction of the cost. So it's all about cost efficiency and compute efficiency using a fraction of the compute resources. So whereas the first 3 years of the AI boom were all about this land grab for GPUs because that was the only chip out there that could really do this AI stuff, over the kind of behind the scenes over the last several years, the big tech dogs have started to develop their own custom chips specific for applications to their own AI models. And Google has had a breakthrough with that with TPUs. And now all of a sudden you're seeing more investment from the big tech dogs go into these custom chips. And I think that's sort of where the AI boom is evolving, where it will evolve in 2026. That as we move from these massive data centers and these massive clusters, I think we're going to go more towards the edge, where you're
Mm-hmm.
going to have edge AI applications, where you're going to have uh, inference, where you're going to have things that sort of, I need this AI to do this very specifically or that very specifically. And when you
Okay.
do that, you're going to want these custom chips, not the NVIDIA GPUs.
Okay. So I want to be really clear about this because I want to understand it myself and I want our listener to understand it. It sounds like the impetus, um, it sounds like it might be a combination of, um, cost plus what you describe as a focus on particular functions. Um, like you said, the Ferrari, if you think of the Ferrari as almost, there's also like Swiss Army knife, right? It's got everything in it,
Mm-hmm.
but I only need one or two of those
Mm-hmm.
tools inside there, and I need them to be really good. So I'm going to put all my resource into that, and that costs less than building a GPU.
That is correct. That is the impetus for it. And then I would add a third impetus for it is, according to my contact in Silicon Valley that are buyers of Nvidia chips,
Okay.
Nvidia operates very arrogantly, and
Of
they
course. Yeah, of course.
I mean, there's no negotiating on price. There's no negotiating on, I mean, you try to get volume discounts and they don't offer that. Like, it's just, they're very tough to work with because they think they're the only game in town. And that has rubbed a lot of the I mean, you don't do that to Meta. You don't do that to Microsoft. You don't do that to Alphabet. And I think that's an impetus for why these guys are like, hey, we're tired of forking over so much. Like, if you were able to work with us on price, maybe we could come to a level where the cost makes sense for us and our own custom chip efforts would not be worth it. But because Nvidia is not coming down on price, one of the biggest line items in their earnings reports every single quarter is gross margins, and those keep going up.
Yeah.
That's because they're not negotiating on price. That has caused these other guys to be like, you know what, you're charging us so much for this that yes, even our custom chip efforts, they're going to be expensive. They're going to be less expensive than buying a bulk volume of your overpriced GPUs.
Okay. The, I want to. I think we'll circle back around to this very thing,
Okay.
but I'm going to get there a, a big detour.
Okay.
And the detour is, I've learned that while all these data centers that are being built with all these GPUs in them, while their load factors, their power usage is like 80, 90%,
Mm-hmm.
the utilization of the servers inside them is very low, I'm told. And I've read and I've heard. And for a while, people were saying, no, there's so much demand. But the demand is by the builders of the data centers. The demand is not because data centers are so fully utilized, right? At some point, this smells a lot to me like gazillion billion miles of dark fiber in the year 2001 or 2000 or whenever, and at some point someone has to, the internet usage for 20 years after 2000 was up 1,000-fold, and the telecom revenues are cut, the services revenues are cut in half, right?
Mm-hmm.
So at some point, um, there's a reckoning here, right? And and Nvidia is no longer, what they are today, and they're no longer the jerk at the end of the phone saying we don't give volume discounts and all that, right? And
Yeah,
I
I
wonder
would I
how
would
far we are
say
from
yeah, I would say that's a massive risk that is building now. The counterpoint there, at least in the present time, would be you go through Amazon's conference call or Microsoft's conference call or Alphabet's conference call, and I
that.
mean
Absolutely.
they're saying they're sold out on capacity and demand is through the roof, and AI
Sure.
bookings are up triple digits year over year. So those guys are selling out servers and selling out cloud compute. So and that's demand that's coming from a Palantir, that's coming from a Lemonade, the AI insurance operator, that's
Mhm.
coming from these actual AI end applications. That's the demand that you have to see. Where I think the reckoning is going to happen is there are so many studies out there and it depends which one you quote. But basically, 90% of these AI apps don't deliver any ROI. 10% of them deliver amazing ROI, like absolutely tremendous, and 90% of them are just garbage and do nothing.
Yeah.
That's where I think the reckoning is going to be. That's where the dark fiber is hiding. That
Yeah.
the 10% is delivering, the 90% is it when people really realize we spent a bunch of money on the 90%, that's the compute, that's the capacity that's going to go dark and could create a reckoning in the market. So I don't think we're there yet, but that is something again within the next year or two that I think could pop the bubble, cause a rough medium term transition period before we get to some long term durable growth.
Sure. And the long-term durable growth will involve much lower prices for the compute. I mean,
I could
yeah.
not agree. I could not agree more with you on that. And then there's something fishy about the ostensible desperation involved in a lot of these massively stated circular financing deals. Right? There's something that just smells funny about that. It's like Nvidia is pouring $100 billion into OpenAI. Like that's just almost too big of a number to fathom. Like $100 billion, like, but then OpenAI is going to take that money and use it to buy Nvidia chips, and so it's just like money going in a circle, and then AMD gets involved there. It's like there's just something really not right about that, not fundamentally sound about that. It feels desperate. It feels like a desperate act from Jensen. It feels like a desperate act from Sam Altman. It feels like a desperate act from Lisa Su. It feels
Right.
desperate.
Yeah. It has the vague feel of something in the accounting world, like channel stuffing, or you're cranking up the demand. You're using your own finances to crank up the demand for your product. Sort of like you'll run out of money at some point to doing that, won't you? I mean, you can't
That
go on.
is, that's. I'm just saying, there's just, they're all so connected now, and that's something I also don't like about the ecosystem, which worries me in the medium term, is they're so connected. Like the telecom builds outs of the '90s, it's all connected. There's no isolated player here. They're all so deeply. I guess Alphabet's a little bit more disconnected, but like when you talk about the OpenAI, Nvidia, AMD, that ecosystem. I mean,
Mhm.
Bloomberg had a chart recently that came out. It's like it's a bunch of circles just overlapping each other, right?
Yeah.
Like they're all so deeply embedded with one another. So
Yeah.
yeah, once one thing pops, the whole thing kind of. I mean, it'll cascade.
Yeah, that's an interesting point that I was thinking about too with Alphabet with Google. A couple weeks ago, kind of having their moment, as you say. Um, like to me, that's a I was like encouraged when I saw Google was coming out with their Gemini and now the TPUs, because it kind of just like I was more worried before with all those relationships with OpenAI and Nvidia just
Mhm.
going back and forth with each other. and promising that they're going to work with each other 5 years in the future. You know, and but with Google, with Alphabet, it's like a legitimate competitor now. There's an actual um, like horse race here with Nvidia, and to me that's almost it makes it less risk. I feel better about that than I did before, like 2 weeks ago.
I could not agree more because I mean on top of that it's cash financed, it's
Mhm.
Yep.
self financed, right? They have a core business that sells ads, and they have enough money from that to develop their own. They're not raising equity. They're not or raising cash from equity. They're not going out to the venture capital markets. They're not going to venture investors. They're not in debt. They're not burning money. They're in the black. They're not. There's no White House involvement, right? The White House is heavily involved with OpenAI. The White House is heavily involved with Nvidia. The White House and Alphabet. I mean, they have a friendly relationship, but there's been no money back and forth there. So it's like it's its own self-sustaining cycle, which I think is it's much healthier than what's going on with the OpenAI Nvidia complex.
I'm glad you brought that up because I agree. It's not WorldCom, right? It's lots of excess free cash flow that you can do this, and they've used a lot of balance sheet. In fact, the four big hyperscalers are now in a net debt position. They tipped into it when Meta, I think they issued 40 billion of notes,
Right.
and so they're just tipped over there, but they still got tons of balance sheet, right?
Mm-hmm.
And they can support that with all that cash flow. That alone is very different from what was happening in the dot-com boom. That alone, are people going to stop responding to internet ads? I mean, I don't know.
Right. Well,
Are
especially
you
when those
disrupted?
internet ads are getting better, right? I mean, that's the thing that I liked about Meta was I don't like their massive debt issuance recently, but the thing I liked about them before was they're showing meaningful ROI on their AI investments. I mean, time spent on Facebook and Instagram was up 6% last quarter. To
Right.
me, that's ridiculous. This is a ubiquity. This is something that everybody's already on. This is something that everybody's already spending half their day on. And you're telling me even that is seeing engagement growth? Time spent on video, Instagram Reels, their new feature was up like 30% in the last quarter. And that's all because their AI algorithm, right? Their AI algorithm knows you better than you know you, and it's giving you exactly what you want, when you want to watch, and for how long you want to watch it. And you just get addicted and you just keep scrolling that way. And so it's like there is meaningful ROI for Meta in terms of their ad business. And then the targeting is a whole nother thing. And then they're automating their ad business as well. So it's like they're actually seeing really meaningful improvements in their core operating business because of their usage of AI. Alphabet is the same way. Microsoft is the same way. So that's one thing or one place you're seeing AI really deliver true financial results for people that are using it smartly. Smartly is the key word there.
Luke, how do you use AI personally?
What do I not use AI for? I use AI for a bunch. I have Gemini 3. I have ChatGPT. I use Grok every once in a while, more for social stuff. So I think it has a really good leaning into social data. But I use ChatGPT and Gemini on the daily, and they're always running in the background of my computer, whether it's for research. So, hey, for example, Credo, a company we just talked about, they reported earnings today, and it was fantastic. And I wanted to get the scoop on the earnings, so I'll pull up the conference call, I'll pull up the numbers, and then simultaneous to that, I'll have ChatGPT 5 thinking or Gemini 3 thinking run a analysis on it. I'll feed it the transcript, I'll feed it the numbers, and I'll have it run an analysis, and then I'll compare notes with my analysis with its analysis when it's done. That's one way that I use it. I use it for streamlining writing and stuff. So if I'm putting out an e-letter and I'm pressed out, or I'm putting out an update on something, I'll have bullet points and I'll say, hey, here are the bullet points. These are my thoughts, my opinions. Just make this beautiful. Make this a well-worded 500-word essay for me. Spits it back to me, and then I edit it and then return it to my own editor. So those are just kind of the ways that I'm using it, but I'm using it literally on a daily basis for everything from stock research to stock writing, investment writing, to timing tweets. So I just got back on Twitter. We're using AI to analyze, what time of day are the tweets doing best, where is engagement highest, what tickers are doing best for us, and then it's giving us, suggestions of how to better tweet about things, or when to better tweet about things, what to tweet about, et cetera, et cetera. So pretty much everything that we do, we're using AI in some way, shape, or form.
All right, for our listeners' benefit, let's go around the horn. What about you, Corey?
Luke just brought up some nightmares for me about Twitter scheduling, social media.
Uh,
In a prior life, I don't know, probably 10, 12 years ago now, that was one of my jobs. Well, it was when Twitter was really just, media companies were just starting to kind of use it, whenever that was, and trying to schedule. And I'll answer your question, Dan, in a sec. But just this trying to schedule out tweets, like when people would. It was very manual back then. Like when people would be more likely to read them, like at the end of the workday or at lunchtime or whatever. So anyway, that just brought back some memories for me. But how I use AI now, I mean, for research, I mean, it's pretty great for sourcing specific the better questions. We've said this before. The better questions you can ask the Chat GPT, for example, the better results you're going to get. So the more specific you can be, feeding these things what you want or what you're looking for, the better.
mhm.
So that's one way. Just having specific goals in mind with ChatGPT or whatever you want to use. Notebook LM, I have started using that more to drop a bunch of sources into, and then you can ask that questions. So you pick your sources, and say you're working on something about tariffs or whatever. You find 15 things that um, are interesting that you think are relevant, and then you can search through all those sources. So that's another one. And then the one I always use regularly is, we've come up with our own like Stansberry headline chat GPT,
Yep.
that is based off of the like fundamentals that we've done for in the business for since it started, of like of what makes a good headline.
Yeah.
And after every digest, I get to the end and I just copy and paste it into that, and it spits out like 10 headlines. I never end up using exactly what comes out in any of them, but it's a
Mhm.
good starting point and adjustment, to adjust from. It just gives you phrases or brainstorms, and then um, that's been really helpful. And
Nice.
so I don't know if the headlines have gotten better or worse though, but that's what I'm doing for
They're
now.
pretty good. They're pretty good.
Yeah.
All right. So I've gone through two phases of this. The first one was ChatGPT, Gemini, Perplexity. Just letting it go out to the internet, right? Just asking and relying on the specificity of my query and asking for sources, right? Um, to do some of the work there, and not just because if you just ask a question, you can ask it three times, you get three different answers, right? It's crazy if you just go out to the general internet. But I've discovered Notebook LM. Do you know Notebook LM? It's amazing. Basically, the company that I'm writing up for the next issue of Extreme Value, I fed it all the 10Ks going back to 2007. I fed it the last three 10Qs because we're near the end of the year here, so you got the first three. And I fed it transcripts from conferences and a transcript of like congressional testimony by the CEO and a couple of other things like that. Then I made another file with all the best press reports, from the best sources like Wall Street Journal, Financial Times, Forbes, Barron's, Bloomberg, etc. And there are buttons on that thing where you can just say, "Give me a mind map," and it'll spit out this graphical thing that organizes the ideas, and you can do like, give me a video, or give me there are these buttons you can hit that spit out various types of reports. And I've asked it all kinds of questions and not had to read. Like, I got a list of one kind of data. I said, go back for 10 years and give me blah blah blah, and it was there like in a few minutes. I was like, I would have had to rummage through that shit for 2 hours to find it, and it found it for me in minutes. So I'm starting to, doing it this time. This is the first time I've used Notebook LM to do an actual write up. But Luke, I highly recommend it. You're recommending stocks too. I highly recommend it, man. If you don't want to like have to read every word of every filing, but you know what's in them and you know the questions you want to ask, there's no substitute for it. It's amazing. It's great.
Yeah, we have Notebook LM. We run Notebook LM too. It's and it's a Google product. There you go. There's
Yeah.
Google AI coming to the top. Yeah, it's fantastic. It's great for financial filings. Like that's the way I think in the financial research world you need to use it. You feed it the raw data as raw as it gets, the 10Ks and 10Qs, and you start digging.
Yep. And there's no it. You just confine it to that data set, right? There's
Yeah.
no there's no baloney. You ask it the same question 5 times, you're going to get the same answer. Like
Hmm.
hallelujah. Okay, now that's intelligence. That other thing, you can call it artificial intelligence, but it's giving me a different answer 3 times. So I don't know how intelligent it really is. So, but that's the difference. That's amazing. Anyway, hopefully our listener will put all that together and find something to do that will make their lives improved. So we got a bunch of tickers out of you just by talking about custom chips. So
Right.
custom chips is a big thing.
Hmm.
Um, what else you got?
Yeah, I would say, I mean, big investment themes for 2026. The custom chips is a huge one. I would say this new Genesis mission out of the White House is going to be big in 26. The White
Mhm,
House has kind of started this new era of state-backed capitalism, if you will. They've invested
mhm,
now in five companies in 5 months. You got Intel first, MP Materials, then Trilogy Metals and Lithium Americas, and just today you got, I think it was called Xlight, a company that makes lasers for EUV machines.
mhm,
So that's five companies in 5 months or 6 months, basically one a month. And then they launched this Genesis mission. I think it was last week, late November, right before Thanksgiving. No one's supposed to announce big news before Thanksgiving, but Trump did. And so we got this Genesis mission, and it's this basically this playbook of what they want to invest in for the next, as long as he's in power. And that's there's 6 industries in there, and by January 23rd, the Department of Energy Secretary, the Energy Secretary Chris Wright, is supposed to submit 20 specific challenges within those 6 industries that they're going to go after in 2026. And given their track record, I think going after means taking equity stakes in the various companies they think are best addressing those 20 specific challenges. So I think that paying attention late January when Chris Wright submits this list is going to be super important. And I think that's going to be your playbook for how to play this trend in 2026 from February to December. I think that a lot of it right now is focused on energy, nuclear fission, nuclear fusion, next gen reactors. Looks like Oklo is going to be a big player there, OKLO. Maybe NewScale, SMR is going to be a big player there. Cameco, CCJ, they own half of Westinghouse. Westinghouse just signed a very big deal. I think it was $10 billion or so with the government to develop a bunch of nuclear reactors here in the U.S. So energy seems to be a very big component of this Genesis mission, but it also includes biotech, which I think is really interesting. I think biotech's a unheralded part of the AI market that's starting to wake up. And it
mhm.
also includes quantum computing, which I found really interesting. That quantum computing in these 6 industries, one of them was quantum information sciences, aka quantum computing. So it looks like the government's now going to start making some quantum plays, which is really interesting because if you remember a few months ago, actually, when we were at Vegas for the Stansberry conference, there was a headline that broke one morning that the Trump administration was talking to quantum companies about taking a stake in them. All the stocks jumped, and then the White House came out and said, "We're not taking a stake yet." And then they gave back their gains. But the fact that that report broke, the fact that there was a leak, I mean, there was something to leak. That's something obviously as they were having discussions. Now I think the Genesis mission puts those discussions into action. So I think there's some really interesting ways to play this. Whether you like it or not, it's happening. This state-backed capitalism stuff, and I think it's going to accelerate in 26.
Totally agree. That's a good one. We've actually it's time to ask our final question already. I feel like we just started talking 10 minutes ago. Um, but we ask the same final question of every guest. And even if we have a non-financial guest, we still ask the identical final question. And if you've already said the answer, by all means, feel free to repeat it. But the question is simple, and it's for our listeners' benefit. If you could leave them with a single takeaway, with a single thought today, what is that? What would you like to leave them with?
I think that you have to take advantage as much as you can, as much as allows, of the next 6 to 12 months in the stock market in the AI boom. Because I do, again, boom bust cycles. We are in a boom. What will follow is a bust. But if you look at the history of booms, the best part of the boom is the final hour of the boom. The best part of a basketball game is the fourth quarter. The best part of a baseball game is the ninth inning. The best part of a stock market boom is the final year or two of that boom. I think we are entering the final year or two of that boom. What follows will not be pretty for 3 to 5 years or 2 to 3 years, however long it may be. So if you're kind of looking at the next 5 to 7 years, the only real time to make fantastic gains, I think, is going to be in the next 12 or so months. So really take advantage of the potential melt up that is on the way in 2026 before the meltdown that always follows every melt up. The NASDAQ, the entire NASDAQ complex, more than tripled from late 98 to early 2000.
Yeah, I was thinking of that same example. Yeah. Well
So,
said. Yeah.
I think we're entering that phase. Take advantage of that because then the NASDAQ dropped 80% over 2 to 3 years. So take advantage of the tripling before the meltdown.
There you go. Well, thanks for that. And thanks for being here. It was great to talk with you.
I appreciate you guys having me. Truly a pleasure.
All right. Well, we will certainly be doing so again within the next 6 or 12 months. Until then, thanks again. It was really great. Now, I want to give everyone listening a recommendation for what to do when the show's over. Luke recently shared a huge prediction involving the biggest story in the stock market today. Now, you've probably heard that the White House has begun taking stakes in a handful of widely unknown stocks and like driving some of them up 200% overnight and stuff. It's crazy. Well, Luke says phase two of this buying spree is coming, and it's going to involve a whole new group of stocks. It all boils down to a national security plan Luke has seen, which lays everything out in black and white. He just named all the stocks he thinks will be involved. And guess what? He did it free of charge. To get his full analysis, just head to lukespowerplay.com. Grab a pen and paper because he shares a lot of valuable information. That's lukespowerplay.com. Head there now and check it out. Well, I always like talking to people who know a whole lot more than me about something, and Luke did not disappoint in that regard. It was great.
Yeah, that was a fun conversation to just kind of talk about something different about AI, I would say. And I'm thinking of those custom chips that he says will be a story in 2026 to watch, and listed off a bunch of companies there to look into. So that was good. Yeah, I mean, kind of, I feel that sort of similar about the societal impacts. Starting to see that about AI. I mean, even if people aren't actually losing their jobs yet, which some are, the emotional, like the fear of it, I feel like is out there, so something to watch too, I would say, in the year ahead as well, and the years ahead, more so politically, I would think, as well as financially for people. But yeah, that was good.
Yeah.
Happy to have him on.
Yeah, we did get into all kinds of different aspects of technology and AI. And I love, of course, we love people who just drop lots of ticker symbols on us. That's cool. And I agree. Hearing more about the custom chip play and the fact that there's like several ways to get involved and actually maybe make some money on it. And also, I knew Luke was an optimistic kind of a guy, but his realism and his appreciation for the cycle is frankly refreshing. I won't name any names, but I know other folks who are big into technology stocks and they don't do that. And I think if you're going to tell somebody to speculate on the next, year or two, you have to remind them what's on the other side of it, which he did
Right.
several times. So that's a really well-rounded guy intellectually, as far as I'm concerned. As an investor.
Agreed. Yeah, totally agree.
Yeah.
Yeah, very important.
Yeah. Yep. So it was great in a lot of ways, really great. And I can't wait to sort of catch up with him and see where the custom chip thing is in 6 or 12 months or whatever, and frankly where the cycle is too, the market cycle. That'll be exciting and interesting. So that was a great interview and a really fun episode of the Stansberry Investor Hour. I hope you enjoyed it as much as we really truly did.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.